Investment property. So why should I buy an investment property? Well, let's just take a look. So when you make an investment purchase, you need to ask yourself some questions. Is real estate a better investment than stocks? What do I need to know before I buy? How do I determine if an investment in real estate is a good deal? What are the risks and benefits of buying investment properties? Well, let's take a look at stocks compared to real estate. The 10-year history in the stock market for the S&P, if you put in $250,000, at the end of that 10 years, you'd have $395,000. That's 158% return on investment. That's really good. That's really good. But let's take a look at specifically Des Moines real estate. If you bought $250,000 home, it only costs you $50,000. Depreciation on that home over 10 years is 68.09%. So the value of the home after 10 years is $400,225. The principal balance of the mortgage after that 10 years is $172,062. So your equity position is $248,163, which is a 496% return on your investment. So let's say you just did an apples to apples and you bought 5 homes because you bought $250,000 worth of stocks instead of and then you bought $250,000 worth of real estate you paid for only 20% down on each. You'd have over $1.2 million. Now, where are you going to get a better return on your money than that? Why is there a big difference? Well, if your investment is small compared to buying stocks, you get to leverage the bank's money. Your mortgage is paid for by the renter, not you. And your 20% investment is appreciating on 100% of the asset. That's the big deal. And there's a housing shortage. Rents are rising. You look at these 2 articles. The first one is from January of this year, and it shows that in 2022, Des Moines, Iowa rents went up 8.2%. And the one that below it, just a little bit slower, says this is from 2021. The article came out in 2022, but from 2020 to 2021, rents were up 12%. So that is a huge deal. Rents are always going to rise. Your mortgage is going to stay the same. You're going to increase cash flow over time. So you could get even bigger returns on your investment than just the equity position and your principal reduction, because you'll have monthly cash flow as well. What do you need to know? Well, you need at least 20% down to buy real estate. If you put 25% down, your rate is a little better. You need to have reserve funds of up to 6 months PITI, because the home's not always going to be rented. And you're going to have to maintain the property either yourself or through a property management company. And you need to know, is the property worth buying? So where do you get your down payment? Well, you can get it from current savings if you have it. You can borrow from an IRA or 401k, or you can cash those out. And you can use equity in your current home. Or I've had a lot of people that I've done business with, they partner with somebody else who has money in a 401k or savings or equity in their home. And they can combine that to get that. But when you're talking about a 500%, almost a 500% return on investment, if you're cashing in things from stocks and all that, you're going to pay capital gains. But you have to think long-term, not short-term. Wouldn't you be willing to spend 15, 20% tax on $50,000 instead of foregoing the ability to gain 500% return on your real estate investment? It's very small thinking. Many investors take HELOCs out of their current residence and use that. And as you go down the road, you can utilize the equity in your rentals to buy new property. So what are the benefits? Well, real estate is about time in the market, not about timing the market. When you're buying investment property, you should think 5 to 10 years. Over that time, you're always going to have a positive investment despite what goes on in the real estate market. There's only been 5 down years in the last 80 years of real estate. So you need to have a longer term horizon. Besides the mortgage interest, the property taxes, maintenance costs, you can also deduct appreciation, which is a huge tax deduction, and you'll be able to limit your tax liability on other income as well. Some other benefits: you're being able to leverage the bank money helps you acquire more assets. You can't go to your stockbroker and say, I'm going to give you $50,000 and you give me $250,000 worth of stocks. But you can when you're buying real estate, because the bank will help you leverage that money. On average, homeowners' net worth is $255,000 and renters' average is $6,300. So the difference is owning a home. When you own multiple homes, as in investment properties, you're just increasing your net worth that much more because your appreciation and your principal reduction is on automatic pilot. You're not doing anything to do that. Your renter's paying your interest down, your principal down, and you're getting the equity by where you bought the home. And how do you know if it's a good deal? Well, I have an investment property analyzer, and it goes through everything. It goes specifically where you're buying your home, what county you're in, and what takes into appreciation gain for historic or what they're predicting it to be. You know, right now historical is a little higher than the predicted, but it's still the amazing return on investment. It goes on monthly cash flow, cumulative cash on cash return, as an appreciation and amortization gain, total return on investment, gross and net revenues, your total ROI, and your average annual compound return. And it does this from 1 to 10 years in a monthly thing. And it shows you charts and graphs. So you can see the small pictures on the side here, but that's how you determine if it's a good investment. So are you ready for an investment purchase? I have to believe that the information that we just got over, you're not going to find a better investment than buying real estate as an investment. So whatever you need to do to get there, whether it's taking a loan out from your 401k or paying the capital gains on your asset liquidation or finding partners, there's a way to do it and we can make it happen for you. I have lots of really good realtors that know how to make this happen for you, and I will do that as well. You just have to get started. And the best thing to do is scan this code, apply online. You can give me a call, you can shoot me an email, you can shoot me a text. Whatever you need, whatever questions you have, I'm here for you to help you start buying your first investment property.